Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update, and this is for Monday, the 30th of July, 2018, about 2:40 p.m. Central Daylight Time. Another day where the metals went absolutely nowhere. Copper's been weakening even since the 12:30 time frame when the settlement price is determined. Gold is weakening a little bit too. Copper's holding about steady. But you didn't get any pop in these markets, even with the break in the dollar index. What's going on is we have a lot of European central bank announcements, including our own, starting this week. A lot of the banks go into their meetings right now. We're going to hear from the Bank of Japan. We're going to hear from Brazil. We're going to hear from the Fed. Then we've got, I think it's Thursday, we got the Bank of England. There's possibilities of shifts going on, and it's a dangerous time for a lot of these trades, especially as you get into a light summer trade in August. Remember, in Europe, there's still a tendency for the people to take off large parts of August for holiday. And it's a culture thing. It's what they do. In the thinning of the trade, you always have to pay attention to. And then come September, everybody's jumping back into the markets. We're still having problems with trade with China. I read reports today from Mr. Wang, their head negotiator. From what I'm reading, we're so far apart that I don't imagine we're going to see anything. Energies are being impacted to a degree because November 4th, the next round of sanctions on Iran, it's August 4th is the next round. The final round's November 4th. There's 2 rounds. And the markets are worried what happens when that next round goes on now. What does it mean for oil? What's Iran going to do? Although the president today held out another olive branch. He offered to meet with the Iranians as he was at the White House. And in the White House, he had met with the Italian prime minister, and he held out the olive branch. I am ready to meet with them. They won't. In any case, you've gone from 1353 to 1223, and now the market is dropping again, as you can see, coming down one more time. This was Friday's close, and given this a weekly chart of closes, this is how the market is starting the week off. Down about 270 for the week so far. As we just look at a chart, we can see we have on a daily chart an inside day where we haven't taken out the lower the high of Friday, but we are down on the day in terms of where the settlement's going to be. The pattern of the chart is still bearish. You still have a pattern of lower highs and lower lows. That is bearish. The resistance is back up at the 18-day average of closes, which in all fairness, we haven't even gotten up to since mid-June. The market has just been able to stay under that and not even challenge that number. The Bollinger Band number has been regularly challenged since June. Now, Bollinger Bands are an algorithm designed to give you an upper and lower number, and the market should trade within that 95% of the time. When the market is going sideways, it's one thing. When the market is already trending, it's a bit different, and hitting these lower bands when it's trending down gets easier than anything, and the fact that the market's unable to get to the 18-day average, just in my opinion, keeps the market well entrenched in the bear camp. Is it oversold? Of course it's oversold. You're at lows for all purposes for the year. You're at lows in your momentum, as you can see. Oversold is not a reason to be bought. Oversold is simply oversold. In the ETF GLD, you have a pattern now of a lower low, lower highs. You're back into your bear trend. Can it be knocked out easily? Sure. Take out this 116.22 area, and that can happen. But you are oversold. The lower Bollinger Band's at 114.64, and that remains in play until the market decides what's the next move, or at least get over this 116.22. Let's assume the market takes out, and I think it's 22. Friday's high, it was 24, so I was wrong by 2 points. Let's assume it takes that out. Well, then 117.11 becomes the resistance. But more important, At the current chart setup, there's nothing that can become bullish as a chartist. Yes, you can go back up, but you still have this lower low, and if you take that out, you have a higher high. That's not a trend. You're also charting in bear territory into GDX. Lower highs, lower lows. The lowest low we've recently seen in this, nothing pretty here at all on the chart. Still bearish, but what this market's doing, and I want to come here so we can see it. You'll see, going back to Wednesday, both numbers were not under 20, but both got under 20 on Thursday, both got under 20 on Friday, and both are under 20 today. That's called embedded. When the red line closes back over the 20 level, pops, then I'd be concerned that you've run out of bear momentum. Until that, no. I see it the opposite way. Momentum has just been drifting sideways in the gold-silver ratio, not throwing out a signal of any type other than the market still favors gold over silver. You still have a clear pattern of higher lows and higher highs, and you're over the 18-day moving average of closes. In the silver market, we still have a pattern of lower lows, I think, or is that higher? Let's go to this, and you can see it pretty easy. This low was 1534. You come up, market broke. You make it 1534 and a half, and today you have an up day. So what you actually have on this chart are higher lows, higher highs. That's bullish. Momentum is trying to come up. That's friendly. However, prices are under the 18-day average. It all gets negated. Nothing's together. In the copper market, you keep coming down. Now it's 1, 2, 3, 4, 5 days against what I call that line in the sand, the 18-day average of closes. And it's from there that the market tries to figure out what next. As of the moment that I'm talking to you, this chart is still bullish. Bullish, you'll say. I say bullish. Higher lows, higher highs. Momentum has drifted sideways a little bit, but the close is over the 18-day average. So you give the nod to the bulls until and unless you take out on this formation 273.35. In the platinum market, you have a pattern of lower highs, lower lows. You keep coming back to the 18-day average and going nowhere. Notice how the momentum is still pointing up. I don't see anything on that chart. I don't see anything on the palladium chart except a market that 1, 2, 3, 4. I don't know if it hit it here or not. No, missed it. 4 days in a row of hitting the 18-day average. Now, the downside becomes enhanced in this chart if the 910 level is taken out. You keep the lower highs, lower lows, and instead of momentum pointing up, the odds would favor it begins pointing down. Momentum in this particular chart is not leading price. It seems that price is just locked in momentum. In the dollar index, you have a pattern of a higher high and a lower low. First thing we know is there's no trend. The market is just trading day after day against the 18-day average going into the FOMC meeting, which the announcement will come out Wednesday, but this does not have a press conference. The market is not expecting that the Fed's going to do anything or say anything that's market moving at this point. Momentum's down. Bias is down, but I call it a sideways market. So you put it all together, you're trying to figure out what to do, and it's not always easy, but that's why I have a charting course for you. This is all video. So you can sit there, you're doing it at your own leisure. It's built like a domino. You do one, built onto the other, built onto the other. Each part falls next to the next step until you understand that it's all about filtering in a very certain way. And these charts start making a heck of a lot of sense. It's videos. What better time than at this slower time of the summer to do something like that? You know, I would do it a chapter a week. No more than that, and you'll be done in no time at all. Maybe 2 chapters a week. That's how, you know, I know it's quick enough to go through that you're going to understand it pretty fast. The course is not expensive. It's $129.95, and there's no shipping, no handling involved. It's all over the internet. It includes $70 worth of charting software. It includes my market research. It includes my daily videos where I explain different parts. I'll focus on different things going on in the market, and it enhances what you're doing. And, of course, there's always the live webinar where you can come in and ask questions directly of me. You can even call from time to time. I take questions from people. So if you're interested in learning something, a gift for someone, it's pretty easy. The course will probably go up over time. That's what I traditionally do in it. How do you get it? Go to our website at www.iraepstein.com. You can call my staff at 866-973-2077. This is all on your screen already. Or you can click up here. If you're watching me on YouTube, it'll take you right to our website. And from our website, go under the word education. I'm Ira Epstein. That's what this is all about, education. You take care of yourself, and I'll see you tomorrow.